Hi traders, hope everyone is doing well. Welcome to my video on the Smart Market Structure Concepts Indicator for the MT4 trading platform. The same principles do apply to other trading platforms as well. So basically the Smart Market Structure Concepts Indicator, what it does is it helps you to identify the real-time market structure, so things such as order blocks, premium and discount zones, equal highs and lows, fair value gaps, and more. Okay, and when you have a good overview of this market structure, it can help you it can help you navigate liquidity and find optimal points of interest in the market by determining where some of the big market players are, where they have their orders placed in areas where you may look to enter and exit trades. Okay, it may look confusing at first. There is a lot going on. Personally, this is not my preferred style of trading. Nonetheless, I do appreciate it's quite a popular form of trading. At the moment, I'm more old school. I like my support and resistance lines manually drawn, along with trend lines. I look at candlestick patterns, obviously good money management, but we'll get stuck into this indicator regardless. So you can see here we have the premium zone, okay, and we have the discount zone here. You can see the indicator will mark if it's a weak high or a strong high or strong low or weak low. Okay, it's all color coded. You've got your kill zones as well. Basically, kill zones will be in times where the market is more active for a particular trading session. Okay, as you can see, this was the Asian kill zone around the Asian trading session. And that's maybe going to be important if you're trading yen-based currency pairs. You can actually use this indicator on any trading instrument, so Forex, stocks, commodities, cryptos, indices, etc. And any chart time frame. I prefer the 1 hour chart and above simply because the higher chart time frames have more price data included within them, and therefore I find the signals tend to be more reliable. That applies not just to technical indicators but also price action analysis, which is an important part of my trading strategy. So what I'm going to do is I like to trade with the trend. Okay, so I can see here that the market is making higher lows. We just mark there higher lows. Okay, so we're in an uptrend. See, there's nice move up at the moment. This is actually a weak high. The indicators mark that, so I wouldn't be looking to sell here. There's been a break of structure there, break of structure there. This BOS, so BOS, break of structure. Basically, when there's been a breakout. Okay, so we can use the indicator to help identify these areas as well. This, if I just zoom in for you, see this break of structure here. This would have been a potential breakout trade. I probably would have been looking more down here myself. This nice move upwards. You can see here, market is making higher lows here, pull back, and a breakout, big breakout candle. So we could have been in this trade here, 1 hour chart. What we're looking, almost 40 pips and counting. Okay. This is why I prefer to manually draw them, because you can see the indicator mark the break of structure. It was based on the wick, but by then the breakout had already had momentum. I would have happily have entered around here somewhere. Okay. So what I do really is I look for the trend direction, obviously higher lows in this instance, and look to trade on breakouts in the direction of the trend. Okay, so you can use indicator to help you spot change of structures. You've got where it says chotch, that's basically a change of structure, a potential change in direction. Okay, and a break of structure was like a breakout of a particular area as well. Okay, if you were looking to reverse trade, you can of course look to short in the premium zone. Okay, what I would look to do is I still want a trend trade. Okay, so unless the overall picture is downwards, I'm gonna not short in the premium, but I will look to buy if price does come back down to the discount zone, or the discount zone is perhaps recalculated at a later date. I would consider then taking a trade there. But one thing I want to do just in comparison is I just want to load up a my template on the same currency pair. I just want to show you the difference. I don't know about you, but you can trade this or you can trade this, okay? And I'm choosing this all day long. Why? Because you can just support, okay? I can see that support, okay? It's just less noise. Higher lows, okay? Obviously, you trade how you want, you know, but for me, I can see the market is moving up. There's a bit of consolidation here, but once we had this breakout, okay, or the break of structure, to be fair, you know, it did show us break of structure around here. So I can see how it would help with that, but is that telling you something that you would not have known by just looking at the chart yourself? I mean, you know, you can clearly see there's a breakout of this zone here. You've got this wedge formation here, and there's a breakout. Price comes back, this resistance then comes support, and then we have a continuation of the trend, and we have our resistance there. Resistance holds it well, but then a breakout of the resistance. Resistance then becomes support. Okay, and we can just trade off of that support level, or you can trade on the breakout as we did earlier on in the video. Okay, we didn't need no indicators to do that, nothing but price action trading, good money management. So if you take this breakout trade, we can place our stop loss just below the low, either here or here. So between 10 and 15 pips, let's say. We've been in a profitable trade at the moment. Stop loss locked in at break even, and we can just wait and see how this plays out. Worst case scenario will be break even. You can even close part of the position if you want to bank some pips, or you can trade this. Okay. I mean, trying to make heads or tails of that for me is just overly complicated, unnecessarily complicated, but that's just my opinion. I mean, price action, candlestick patterns have been around forever, so that's my preferred method of trading. But, you know, change of structure, you can see here, there are instances where, you know, it did identify here, we had a change of structure, i.e. a reversal. Okay, so that was a cheeky reversal trade if you wanted to take that change of structure breakout there. However, I would be looking at the overall picture and the market was moving up. So again, I would have probably ignored that. Then you got a change of structure back to the buy side. A good example from the indicator there, okay? Change of structure, we're in an uptrend, resistance, breakout of this resistance, then comes support, continuation. So even down here, okay, we had the higher lows, we had the change of structure here, so this would have been a good trade picked out from the indicator. So you got your wedge pattern formation coming along here as well. Move upwards, pull back, and a breakout to the upside. The thing is, if we just switch back over to this chart, we find the same area. And I mean, did we need the indicators to do that? And we can just see higher lows, move upwards, pull back, and a breakout. And we probably would have gotten a bit earlier as well. Bullish candlestick patterns. I'm more of an old school trader, I guess, now. But I do understand why you know why you'd want to get involved in these market structure indicators and stuff. Just try not to overcomplicate things, because at the end of the day, you can have the perfect entry. I mean, you can use this smart market structure concepts indicator and find the ideal entry. But if your money management and your trading discipline are off, it's not gonna matter anyway. Okay, so by that I mean, we can see this can pick up some good trades, especially when you're trading in the direction of the trend. However, if you have the perfect trade, but you know you have a 10 pip stop loss and a 10 pip take profit, you're just going to end up chasing your tail. I feel if you have consecutive losing trades, and it just makes it hard to recover. Whereas if you've got, you know, you use a stop loss on a recent low or recent high, and I don't always use a take profit. I would just use just lock in a good trade at break even. Don't let a winning trade turn into a losing one, and then trail the position as much as possible. So even if we've got 20 pips stop loss and we take 2 losses for 40 pips, we know that when we do eventually catch a big move, we can make back those pips and more. Okay, so an example of that would be, we can see a nice downtrend here. Okay. I have this level of support form. Once this is we have the breakout there, you can see markets making these lower highs. Got a bullish flag pattern there as well. So you've got your flagpole, your flag, breakout to the downside. And then we know we're in a downtrend, okay? So after this move down, you can wait for a pullback, and then we can just enter on a breakout from the pullback here, and we're in this trend. Just zoom out. You can get in there. You can wait for the trend to continue. You have another pullback. Obviously, don't want to sell too low, but I'm just showing you how simple it can be, especially trading higher term chart timeframes. Okay, moves like this come quite obvious, but if you would just traded this breakout here, let's say, over 300 pips, and we didn't need any magical unicorn indicators for that, did we? Stop loss above the high here, so around 20 to 25 pips. Use a trailing stop, so stop loss above the high, 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 above the high. We could have more or less rode that move all the way down until we see the market start to make these higher lows in this consolidation. We could have manually exited if the trailing stop wasn't triggered. You can close part of the position on the way down as well, bank some pips. But I know I've gone away from the indicator we were looking at, but I just think whilst I have you here on this video, it's just important to emphasize price action, trading, good money management, and trading discipline. Okay, a nice bearish flag there. See down, that's your flagpole, trend line downwards. That's your flag, nice green and red flag, and a breakout there. In fact, there's another flag pattern there as well. I do have videos on flag patterns and other price action patterns. And just for good measure, flagpole, flag, and a breakout. But obviously, be careful, you don't want to sell at the low. If you've seen a big move like this, you had ample opportunity to enter flagpole, flag. You could have entered any of these opportunities. You don't want to end up selling too low, okay? Get caught in a bear trap. Yeah, make sure your trading emotions are in check. So don't let negative emotions like fear, anger, and greed cloud your judgment. Don't overtrade, don't FOMO, don't force trades that aren't there. If we just go back to that same downwards, you see that downwards trend here. Okay, so this is the trend that we were just doing, marking the breakouts with the flag patterns as well. You can see this indicator, if we did use it, where there's a break of structure, as I said, in line of a change of structure or break of structure, in line with the trend. Okay, and well, yeah, it's basically the same principles, isn't it? We're just trading the breakouts in line with the trend and having good money management. Okay, hopefully you found something useful in this video. If you search for smart market structure concepts MT4 indicator, you'll find this indicator and you can download it and use it on your platform. If you can like and subscribe, we really appreciate it. Thanks for watching, and I hope to catch you on the next one. Take care.